Okay, good morning, everybody, and thank you for joining us today for a live webinar on tax relief for your business. We are coming live from various destinations across Utah. Personally, I'm not in Hunterley Bay, but I'm here at downtown Kiln in Salt Lake. And joining me today, I have David Carlebach from World Trade Center. David is VP of International Investment. I also have Tim Whipple who's a partner at LJ Cooper Tax Strategies, and Paul Barrus, shareholder at Parr Brown. My name is Andrew Redpath. I'm the moderator for today's live webinar session. I am co-founder and chief operating officer at Kiln. Many of you will already know me, and many of you already know the people that are joining us today on the technical panel. Now, it's been a very interesting 8 weeks. We're navigating some very challenging times at present economically, and as things unfold across the COVID-19 crisis, there have been a number of initiatives that have been pioneered by the federal government, including the PPP process, the EIDL application process, and thirdly, various tax benefits that have been passed through the CARES Act. And so before we get into the details and I throw around a few questions to our participants on today's webinar, I just wanted to caveat that it's obviously, we wanted to give a quick overview of the current state of play through different lenses, but it's also important to get some of these topics around the tax relief on people's radar. It's a fairly complex topic and it's broad reaching in terms of its application within the CARES Act. So it's very important to take note, but also ensure that you're seeking appropriate tax advice within your own advisory network. So I think we're going to kick off today with a quick summary from David about where we're at with the existing SBA loan process. And so I just wanted to throw this out to David. So David, today, given that we're focusing on tax relief, are you able to give us a bit of context on the overview of the federal response thus far to provide economic support post-COVID-19, and particularly, where do the PPP and EIDL loans fit in?
Great. Yes, happy to do it. Thank you, Andrew, for having me speak today, and thank you for that question. This is important information. I'm glad we've got a good audience who can learn about it, the overall scope of the federal response, as well as the particular business tax relief provisions. Just to step back, as you said, the business tax provisions are part of a broader tapestry from the federal government. There have really been 4 major responses. Sometimes we hear this on the news as well. The first response, the second response, et cetera. I just wanted to overview those for you going back several weeks. So the first response was the tax day postponement. And this was just as simple as the federal government saying that you could postpone paying your taxes with no interest or no penalties. That was the first big form of relief. The second was the Families First Coronavirus Response Act, sometimes known as FFCRA. That was in mid-March, and that was really about letting employees stay home, especially employees of small businesses, if they were sick or had sick relatives or had to provide care to sick people. It created a mandate to allow time off for those purposes, but it also provided a tax credit so that small employers could pay for the costs of that type of those type of leave programs. So that was the second big response. The third was the CARES Act, and you've mentioned that a few times today, and that really was the granddaddy of them all. The centerpiece of the federal response had many pieces to it. Some we have not heard much about yet. Some we've heard a lot about, such as the PPP program and the EIDL loans. I just wanted to quickly overview the CARES Act. It was $2.2 trillion. It included $500 billion for large corporation relief. I don't think we've heard much about that yet at all. This was the quote unquote slush fund that everyone was worried about. It's where they're going to help out the airlines, etc. There was $180 billion for public services, including food banks, replenishing stockpiles, etc. There was $340 billion for state and local governments. Utah will get its pro rata share. We have not, as a state, yet really decided what to do with that money. One of the future sessions of the legislature will deal with that. But that could be, $2+ billion for the state of Utah. There were $600 billion for individuals. This includes the cash payments and rebates that many of you have heard about, the $100 check that you were supposed to get in the mail. It included provisions for student loans, as well as very rich provisions for unemployment insurance. This includes the $600 extra per week that those filing for uninsurance would get, as well as money for unemployed insurance for workers who typically don't get unemployment insurance, the Pandemic Unemployment Assistance Program. And then there was, as you mentioned, benefits for small businesses. That is where PPP and EIDL loans come in. Those were super popular. That was $350 billion, a large amount of that for the PPP program, which would be basically forgiven if you maintain your payrolls and your employees for the 8 weeks after you get the loan is forgiven. And it was meant specifically to cover the costs for employment of your for your full staff, plus money for utilities, rent, mortgage payments, that kind of thing.
So I assume, oh, sorry, David, keep going.
No, so that was another key part of the CARES Act. That bid was oversubscribed, if you will. And just this morning, the House passed an additional $480 billion to top that off, to help deal with the backlog of applications that most of the banks have. And we can talk about that further, but that's the other piece. And then the final piece, and I'll let you go, let you get back to questioning, was what we're about really here to talk about today, which was business tax relief provisions. That was roughly $200 billion of the $2.2 trillion. A relatively small part, but still $200 billion and well worth understanding.
So it's abundantly clear that the federal government's really thrown the whole arsenal at combating the economic impacts of COVID-19. And really, there's a gamut of sectors and scope that are covered by those efforts. And really, I think based on the topics that we're covering today and the audience that we're trying to address, and it's primarily small business owners, everyone, I assume, unless you've had your head in the sand, would know that the PPP and EIDL loans have been really the primary source of economic support over the last 8 weeks. And it's been far from a smooth process. I know that because we've gone through it ourselves. And I know that there's been a lot of concern as well around the first tranche of funding drying up. And I think statistically, it only served 5% of small businesses. But it's great to see that the Senate's come back and the federal government's come back together to top up additional funding. Now, you mentioned the $484 billion that's gone into that second tranche. 100%, it's not 100% of that funding which is being allocated to PPP. There are adjustments that have been made to account, well, not adjustments, but allocations that will be carved out for hospitals, etc. But we're anticipating, that it will be an equivalent value for the second tranche as what we saw in the first. Now, that's obviously really attractive for small business owners. Can you just expand a little bit on that?
Yeah, exactly. So of the $484 billion, 310 of it is for PPP loans and 60 for the EIDL loans, which are emergency income, economic income disaster loans. And those are very similar to the PPP loans. They're administered through the SBA. In fact, you get them directly from the SBA, and they're meant to cover costs other than payroll, rent, and utilities. And so, yes, there's a good amount of money for both of those. The general sense is that the backlog of applications that are in the system already, either with SBA or with other lenders, is probably going to fully consume the second tranche. Mm-hmm. But with that said, if you do have an application in but have not heard back yet, good news, there's more money coming and there's a much better chance that you'll get your loan approved. If you don't have an application already in, everyone's encouraging you to get your application in. And, there are some provisions within the new tranche that will ensure that smaller businesses and smaller banks have a better shot at you getting the money. So some is reserved, some of the new money is reserved for smaller banks and smaller businesses, and even smaller businesses than just quote unquote small businesses.
Well, so I think that's an interesting point. I think it will be very interesting to see how quickly the second tranche is allocated and where the federal government lands on potentially a third tranche, because as we know, if you deep dove on the mechanics of the first tranche, a lot of that was carved out and allocated to large clients, and banks already took an independent decision on that. So everyone else that had gone through the stress of applying was then placed in a parking lot effectively. And that allocation of funding from the second tranche should, in theory, a lot of banks have been underwriting behind the scenes, waiting for approvals to roll through on this second tranche of funding. So I anticipate personally that the funding will be allocated very quickly. So as David said, for anyone listening, if you haven't addressed this topic already within your advisory network or gone to task and got your applications in for PPP, it's probably critical that you try to do that now. Better late than never. Now, I think we've addressed sort of a lot of the topics that we'd earmarked within that PPP funding. It's anyone's guess whether the third tranche is going to be available. But really, we're going to touch on some of the components around forgiveness. But the real crux of this conversation for today is if you are unsuccessful with PPP or the EIDL loans, or you're of scale that they don't apply to you, then what are the other mechanisms? And that comes within the CARES Act and some of the tax benefits that have been applied. But before we get into that detail, I wanted to get Tim to talk a little bit more about, assuming that you are successful in your PPP application, what does forgiveness look like? What are the requirements? And there's timeframes that are tied into that as well. It's an 8-week plan, effectively, to allocate that funding. It was sufficient funding for 2.5 months of equivalent payroll costs for the company, plus benefits, and there's a formula for that. But Tim, do you want to step us through just quickly? So if you're successful as a company with your PPP application, you receive funding, the clock starts, right? And once it starts ticking, when does the 8 weeks begin for starters?
The 8 weeks starts when your loan is funded. So when you actually have the money, your 8-week period.
Well, execution of documents or receipt of funds?
It says funded in the actual SBA document. So that is how we are choosing to interpret funded.
There's an application. There are certain caveats of what that funding can be used for, and it's been well socialized. But do you want to just give a quick summary? There's probably 4 categories in which that funding can be allocated to. It's not just payroll.
Yeah, well, payroll is the main one, but payroll actually includes benefits that go with that payroll, such as health insurance, 401k matches, and such. And technically, that number is how you got the loan was off of that. But it also can be applied to either interest payments if you own your own building, or lease payments if you don't, and also can be applied to can be applied to utilities. So, and there's some percentages we can go over if you want, and that the percentages are where it starts to get complicated. The forgiveness percentages.
Mm-hmm. All right, excellent. But that's helpful to know. So it's important. I think the rate attaching, so there's a grant, the primary mechanism is a grant mechanism, right? There is, though, an interest rate that's applied in the event that funding is not utilized for those specific expenses. And I think it's around 1%, is that right?
It's 1%, but for the full 2 years. So it actually works out. And interest does start accruing day one, but there are no payments due for 6 months. So
simple interest by the sounds of it.
Yes. So, I think they're hoping that pushing that out the 6 months will give people time to apply for the forgiveness.
Okay. Is there anything more you wanted to embellish on with respect to the forgiveness component? We've talked about the categories that they apply to, but obviously there's an important element to track those expenses and make sure that you're sitting within the percentage allocations within that agreement.
Well, and I just wanted to make people aware that there's some tests they need to pass. So specifically the full-time equivalent employees. So it's the Payroll Protection Act. So if you shrink your full number of employees, we now have a fun little pro rata math test we have to do to see how much of your loan is forgiven. So, and there are 2 different time references you can go back to. I'm not going to bore everyone with those, but there's 2 different points in time you can go back to establish your full-time equivalents.
Okay.
So that is something people maybe should start gathering the data on now and start comparing what's going on. And they are allowed to bring people back. So if they were furloughed, before you received funding, you can bring them back now, and they will now count in your number.
So that is application. So can I just clarify that? So if people were furloughed prior to the funding being received, it is not necessarily funding that has to make the employee whole on that furlough period. It's to apply to the next 8 weeks. Or
Correct. Yeah. So it's not backward-looking expenses; it's forward-looking expenses.
Now let's assume that we've gone through the 8
one more point on that, Andrew, real quick.
Go for it, Tim.
Because there's also the limit. It's trying to protect people's paychecks. So for employees that are earning less than $100,000, you also have that test that you have to pass, in that for if you've reduced their pay by more than 25%, there is now another little calculation you have to go through as to where part of it will potentially not be forgiven on that as well too.
Mm-hmm. Okay. So another follow-up question, probably the last question on this topic around PPP. In the event that you've received your funding, you've gone through the 8-week process, you've tracked the expenditures and in line with that process and the requirements, what does forgiveness look like? So when do you apply for actual forgiveness on the loan? Is it after full allocation and deployment of the capital? And what documentation could be required?
That is one of the areas we're still waiting for some further clarification on. So we do know the entity that is servicing your loan is how they've written it, is who you need to apply to for forgiveness. The SBA has said that they will put out kind of a forgiveness checklist. It is not available as of the last time I looked. So that's not quite there, but they're actually putting some latitude in the hands of these loan servicers. So our recommendation is to really document and show, maybe even potentially go so far as to keep that money separate so that we can show very clearly how that's being deployed over that 8-week period.
Receipts matter. Receipts matter, documentation matters.
Yes.
And process matters. So commingling of funds not commingling funds might simplify that process for business owners.
Yeah, that's one of the areas we just don't know exactly what they're going to require for that. So, our thought has been, if you're in that 8-week period, overly document what you're doing with that money.
Right. Excellent. Thank you very much, Tim. Is there anything else that either Paul or David would like to add that you think?
I did, just to share one very simple summary of what Tim said. I heard someone say that with the money, you should pay your employees and negotiate with everybody else. And, if you really want to protect yourself, take care of your employees, because that's what the program is designed to do. And with respect to all your other costs, negotiate. I just thought it was a good rule of thumb.
Absolutely. And there is fine print as well. There are protections in place for the federal government. As David and Tim have said, the primary intention is to protect the payroll of companies through this time of crisis. But there are severe penalties as well. It's not either or, but if there are certain very clear exclusions of what that money cannot be used for as well. And if you do breach that, there are penalties and serious potential criminal penalties that arise. So be mindful of that. We're not going to get into that into detail. I've just had a question come through really quickly, and it might just be worth noting. So this has come through from one of the viewers around PPP specifics. I'm going to throw this out to the panel. Can you address an unpleasant reality of PPP? So the employer contributions such as employer Medicare, OASDI, Fed unemployment, state unemployment, workers' comp. This is 14% incremental to gross wages. Is forgiveness based on expenses incurred or expenses paid? It's a lot to digest. Would you like me to repeat that?
I got it. Do you want me to run with it, guys?
Please.
That's a tough question. That we don't have the perfect guidance on that. So some small employers don't necessarily have to pay that, till the end of the quarter, or something like that. So we are currently operating under the assumption that that it is incurred. So if you are incurring those expenses in those payrolls, I do think then they will want proof that you paid those for the quarterly. I think the forgiveness would potentially be withheld till then. But that's a guess. I don't think we know that exactly at this point on how that's going to work.
So I just want to, there's outside of the scope of what we're discussing, but on that topic, do we anticipate, there's obviously a resource center through the SBA platform. Yeah. Is there any attempt to address Q&A? Because there's a lot of ambiguity still on how these topics should be treated. What's the best source of information? Is it your tax accountant? Is it the SBA website for small business?
I think it's just the random videos on the internet. Those are amazing.
Okay. And I suspect we'll end up being one of those random videos as well.
It's tough. There's so much misinformation out there right now too, that I feel I spend a lot of my time dealing with misinformation and reinforcement.
No, I hear you. Well, thank you.
SBA is great. SBA is a great place to look. I feel they've done a solid job keeping it updated. I think obviously can I make one more point on that last question?
Yeah, go for it, Tim.
If you're using a payroll company such as like an ADP or a Paychex or something like that, I didn't mean to leave anyone out, but they pay those instantly after your payrolls are processed. So, you know, I would argue most people using a payroll provider wouldn't necessarily have to worry about that last question. It's really just the small employers that do quarterly 941s and SUTA,
run it in-house,
stuff like that are going to run into that issue.
Well, I mean, given that we run our own business, you know, Kiln, we run a business here as well. We do have a PEO that supports us with our HR function, and I have to admit there's both a psychological and a procedural benefit using a third party to assist. But if you are, as Tim noted, in the corner where you don't have advisory or support on those functions and you run them in-house, you know, as a default position, my guidance would be run with the example that's set by these payroll providers. You know, that like Tim said, and it's different for different filing requirements for different types of business, but without complicating, it's better to err on the side of caution and then versus not, because it could create headaches on the back end. But I think that's a really helpful and succinct summary of where we're at in terms of federal efforts, state efforts, also in terms of the next steps of the PPP once you qualify, because it's going to hopefully happen for a lot of people and companies over the next week. Now, I think it's really time to sort of pivot into the nuts and bolts of some of the tax provisions, the CARE Act provisions, and specifically, you know, we're wanting to address the eligibility and exclusions related to that. So, yeah, it's such a broad topic, and the intention is to try to address, you know, in the time that we have, probably 40 minutes left of this live stream webinar, topics that are most relevant for small businesses, right? Small, medium enterprises. And Paul's going to help, and obviously Tim and David, if you've got anything you want to chime in with, please do. I'm just going to lead off with a couple of questions that's, you know, starting with the CARES Act. And the certain tax benefits that are also afforded to businesses as a consequence. So, Paul, can you embellish a little bit for me? Can you provide us a brief summary of the various tax changes that may benefit businesses, and including those, you know, including small businesses?
Yeah, Andrew, I'd be happy to talk on those changes. Thank you for having me on the.
We can call it a show. This might
show.
It is a week.
This will be a hit on YouTube, from what Tim said earlier. The random video that gives everyone their advice.
On our channel.
Yeah, right. Speaking of advice, I mean, just what I do in all presentations as a lawyer, I have to say, you know, this isn't legal advice. This is my best summary and statements. If you need legal advice, you know, I'm happy to answer those offline.
Absolutely.
So that, excuse me, I do not have the coronavirus, but I had a slight cough there. The CARES Act, you know, there's the first, you know, big benefit, and it's not complicated, is how it interacts with the PPP loan and the non-taxation, right? So if you generally under the tax code, if you have a debt you owe a lender and they forgive that debt, you have taxable income at, ordinary income rates. And so this provides an exception to that rule that it's not taxable. So you receive the loan, the PPP loan, it's forgiven. You don't owe tax either on it. So it's a great benefit, the PPP loan. To the extent you're not able to get a PP loan, there's other tax credits that can apply. And some tax credits will apply even if you receive the PPP loan. So other tax credits are the employee retention credits, the delayed payment of certain employer payroll taxes. You have certain loss limitations have changed. There's a lot of temporary changes. There were tax changes that were made by the 2017 Tax Act, and those have changed temporarily under the CARES Act, related to net operating losses, limitation on business interest deductions. There's some changes to the depreciation of qualified improvement property. You have delayed tax return due dates. And there's other changes outside the CARES Act, the FFCRA tax credits. And there's other very, the big item that you hear about in the news are the stimulus checks. It's referred to in the CARES Act as the recovery rebates, or the IRS often refers to them as the economic impact payments. So there's a lot of changes, retirement plan changes. I think the focus today that I want to focus on is more how does it interact with the PPP loan and employee retention. Those are the questions that are on everybody's mind right now. To the extent we have, yeah.
I think that's a helpful summary, because I know I've got some notes here as well, and there's a plethora of other topics that fall within this, of relevance, and you've addressed a good chunk of them. But there's, you've got other things like temporary changes to NOLs, loss limitations for non-corporate taxpayers, limitations on business interest deductions, depreciation of qualified improvement property, delayed tax return due dates, and other items. And those other items it cascades. Below. And I think it's important too, Paul, before we get into the nuts and bolts on how the tax breaks apply in relation to the PPP loans, the reason why we're addressing this, because if you look at the hierarchy of benefit with the stimulus program that's been released, we've got the PPP program, we've got the EIDL, or the idle loans, that follow as well. And then there's the tax benefits. And and that's probably the cascade of benefit as well in terms of the hierarchy. PPP will probably, we've all agreed, we discussed this before the call and the webinar, that will have the greatest impact, the immediate impact, because of the exemption from taxation. It's immediate cash stimulus. It's directed towards keeping the country employed. But it does have an impact, as you're about to talk about, on tax credits or tax benefits, because, and I'm not going to steal your thunder, I just want to get into it, but it's important to note that, if you're watching this and you've qualified for PPP or EIDL loans, it does have implications on the tax side of things, of what you can draw down as benefit. However, if you've missed out on PPP and you don't qualify for EIDL, then you've got to look at some of these tax incentives that have been released under the CARES Act, etc. So I just wanted to qualify that. So there's the rationale and the logic of building this conversation. It's important to keep that in context. So without further ado, I'm going to roll into the topic of, can businesses benefit from tax breaks and the PPP loans simultaneously?
Yeah, and that's a great question that a lot of people are asking. Can I benefit from the PPP loan? What other tax credits can I benefit from? And stepping back to it at a high level before I get into that question, I was thinking while you were talking, Tim had brought this up earlier with the PPP loans, documentation's important. With a lot of these tax credits, documentation's important. Talking to your advisors about, amendments that you can, on prior tax returns that you had, to obtain some of these tax benefits. And so specifically with the PPP loans, if you receive a PPP loan, you're not eligible for what they call the employee retention credits. And that's a credit that you receive for certain qualified wages per employee. We could get into those technicalities. In essence, it's about, for 10,000 wages you pay, which includes some qualified health care expenses that can be included in that, you can receive up to a $5,000 credit. But if you have the PPP loan, you're not available for that. But like you said, if you can get the PPP loan, everyone's saying it's a no-brainer, even if you can't receive the employee retention credit.
Got it. So then what about the Ff Cra tax credits? Because that's different, no?
Right. Yeah. So the Ff Cra tax credits are are related to those mandatory sick leave for employers that are under 500 employees that have to provide, sick leave or family leave to take care of someone related to, the COVID-19 pandemic. So there's tax credits to fully cover those leave payments, and those can be received. You still can receive a PPP loan and the Ff Cra tax credits, but you have to allocate it. It can't be part of the payroll costs that are forgiven under the PPP loan.
Right. So I actually want to raise another topic here that we haven't pre-discussed, but what about, so you said in companies under 500 employees. Now there's further loopholes or exemptions if you're below 50, typically, right? In terms of
Yes.
HR policy and the way the law applies. Can you just touch on that? Because at Kiln, we've got probably about 75% of our member base would have 20 to 25 employees or less. So how does this apply to the companies of that scale that fall within that exemption? And can you just define what that exemption typically looks like?
Right. So yeah, there is an exemption for the leave that you have to pay, the mandatory leave, sick leave, if you're under 50. It's an exemption for hardship that you can't be able to make those leave payments. And so, I'm happy to go into more detail than that, but it doesn't really change the tax. If you don't have to make the payments, then the change is you don't receive the tax credits.
Yeah. Okay.
And so if you are, but if you are under 50 and you still have to make those payments, you don't qualify for those exemptions, then you have to then the tax credits are available.
Yeah. Okay. Understood. But I was just alluding to the fact that it applies as law for companies over 50, but there is an exemption to pay those sick leave obligations if you are under a certain critical mass. And it's an unsavory topic and hopefully one that we don't have to apply, but it is of relevance with small business owners that are under the pump, at the moment financially, and where every dollar matters, both for their employees, but the PPP hopefully addresses that. I just wanted to get that out there.
Yeah. And yeah. And I can go into more
We'll
detail.
pivot off that topic because
Okay.
I don't want that to leave a sour taste in anyone's mouth. So we'll move off that, but I just wanted to flag it. Okay. So moving on. So will an employer be subject to a penalty if it defers employer payroll taxes pursuant to the CARES Act and then later receives forgiveness of a PPP loan?
Yeah. So this is one of those items that when the CARES Act first came out, we're looking into it. It says that if you receive a forgiveness under a PPP loan, you cannot defer employer payroll taxes. And the question is, well, when will you know that you're forgiven? When will you receive the PPP loan and then know you're forgiven? If you start delaying employer payroll taxes that are applicable under the CARES Act, just the Social Security tax, will there be penalties assessed? It was a big trap that people were concerned about. The IRS has since provided guidance.
Okay. And what is that?
If you defer, you can defer those employer payroll taxes until you actually receive a decision from the lender of the PPP loans, an issuance of forgiveness. And so that's a huge benefit that everyone. So even if you're getting the PPP loan, make sure you're talking with your payroll, whoever's doing the payroll, and that this is available. You can defer the employer payroll taxes until that forgiveness. And now the question is, well, what is it delayed to? And it's delayed to those employer payroll taxes aren't delayed to the date of the issue of forgiveness. They're delayed to the dates for all other employer payroll taxes, which is December 31st, 2020 and December 31st, 2021.
Okay, that's important. That is important to know. So what employers, Paul, are eligible for employee retention credits?
Yeah, so that's a good question. So it depends, partly on the size of the business. Everyone, can be eligible. It depends on the corona. So the size will matter, and also the circumstances for your business is undergoing related to the COVID-19 pandemic. So if you've been affected by a governmental authority that said you have to shut down, even partially shut down, or you've had gross receipts that have declined. There's a test for that, but it's generally about 50% from the applicable calendar quarter of what it would have been 2019 to 2020.
Right.
So
Okay.
all employers are eligible under those circumstances, but it's going to depend partly on size too.
Okay. All right. So it seems like as we go through these questions that there is a degree of ambiguity still that remains, similar to what's evolving with the PPP and idle loans. But I guess documented evidence, and making sure that you're consulting with your tax advisor is critical to make sure that there's no missteps.
Right. That's exactly right.
So I just want to roll on to the next topic that has come to mind, and that's for an employer with a business that is partially suspended due to government orders, and orders are eligible for employee retention credits. What does it mean to be partially suspended?
Yeah, that's a good question. So I'll just try and simplify this, hopefully not lose too much of the technicalities, but the IRS has provided guidance on what it means to be partially suspended. They gave an example of a restaurant. And so I have little kids and they like to go to play places and they can't go to those anymore. Name your favorite fast food restaurant, right? And the IRS provides guidance. It's more broad than this, but if a restaurant's shut down, they can still do drive-through, carry out, your curbside pickup. But you can't, but you've had an operation where the business people would go in, they would eat food, dine in. You're partially been suspended, the business operations. And so you are eligible for these employee retention credits.
But who determines the threshold?
That's a good question. I haven't seen like a threshold if 95% of your business is through the drive-through. Is it partially suspended? It's pretty broad, the statement, the IRS tax example that they gave, and it doesn't have a threshold that I've seen.
Well, everybody loves a bit of ambiguity when it comes to the IRS. It makes everyone sleep well at night. I'm sure there'll be further guidance on this topic that will follow, but they're important topics to just raise and address, and for people to take note. I'm going to jump across to moving on to the Ff Cra credits just quickly. So when an employer receives the benefits of the employee retention credits, when can an employer receive the benefits of the employee retention credits and the Ff Cra tax credits in parallel?
That's a good question, because we have this benefit out there, but do we have to wait, till the quarterly filings of these taxes? The wage payments aren't necessarily tied to the specific employer payroll tax that's being credited. And so the government's provided guidance that you can begin to reduce your employer payroll tax credits immediately, and use that for qualified wages under the employee retention credits, or to pay the mandatory sick leave and family leave under the Ff Cra. They've also provided the advance payments. If you can't, let's say, the example is your qualified wages, you've had up to 5,000 for a specific employee that you've been eligible for the max, but you only have 4,000 of applicable employer payroll taxes to cover that you've already reduced and paid it to the employee for qualified wages. You can then receive a advance payment for that extra 1,000 through a form 7,200 that you can then pay for that additional 1,000.
Right. Well, that's good to know. At least, so there's no loss of benefit there by the sounds of it.
Right. Yeah. So the government's trying to get this out as soon as possible. Make sure that you're getting these benefits as quickly as possible.
So I think the last topic that would be a benefit to cover is around Social Security tax. And then I actually want to open it up to people that are watching this webinar. If you've got questions, please put them into the chat comment or the comment section, we've got someone who's actually monitoring those comments and feeding me those questions. So if you've got something that you'd like covered that we haven't, please throw out some questions as well. So back to this topic of social security tax. So what employers are eligible for the delayed payment of employers' share of the social security tax? So, and when are such taxes due?
Right. So and we've covered on this a little bit, but all employers are eligible for this delayed payment. That's the general rule of the employer payroll tax for the social security tax portion. I mean, there's other payroll taxes, but as discussed earlier, if you receive the forgiveness of the PPP loan, after you've received that forgiveness, you're not eligible to continue delaying employer payroll taxes. The due dates are, it's a favorable delay to December 31st, 2020, December 31st, 2021. 50% of those taxes will go to 1 year and 50% to the next year.
Mm-hmm. Okay, excellent. Actually, and I think there's another topic that has come to mind and I think would be relevant as well, because there's the consideration of business losses or excess business losses and limitations around that. So can you just embellish, Paul, what did the CARES Act change about the limitation on excess business losses?
Yes, so this is one of the items that the CARES Act covers that's related to the recent tax changes in 2017. There were changes in 2017 that added a new section 461L, and that limited the amount of deductions a business could take. A small business, anyone that's a non-corporation. So your LLCs, your S corporations that are pass-through entities that aren't, your C corporations. And in essence, this loss is there's a cap that you can take. So the formula of what an excess business loss is, it's the deductions eligible, attributable to your trade or business over the gain attributable to your trade or business. Plus, they give you this amount of $250,000 or $500,000. It's adjusted for inflation, that amount. But that was to go in place in 2018. It's been delayed to 2021, the impact of that. And under the CARES Act, that limitation was only going to last anyways till 2026.
Okay.
So it's more of a limited time. You can take greater benefits now. I think the big takeaway from this, a lot of experts are saying, is that now there's also changes to net operating losses. You can also carry some of those losses that you have this year back to other years. You don't just have to, because anything that was an excess business loss had to be carried forward to the future. You can use a certain amount this year, couldn't carry anything back, could carry some of it forward to offset future gain. Now you can carry it back if you had a good year last year. So it provides a significant reduction in taxable income,
Mm-hmm.
previous tax returns, and maybe get tax credits.
So there is, I think this is really helpful context, because it is such, as I said, there is a plethora of information out there at the moment, particularly on the CARES Act and the tax benefits that flow through. There's another component that we haven't addressed and we're not planning to address though on this conversation, which relates to individuals and how that applies. And I think that's something that everyone needs to address. Business taxes and corporate taxes are one thing, which are pressing and important. And I know we're going through the process at the moment of preparing for filing, even though the extension has been applied, because it doesn't hurt to get ahead of it, because with all these changes, different information requirements result. But it's also important to get that on your radar as well when you're talking to your personal tax advisor, where you can seek benefit and relief through various deductions, reductions, everything, other items that apply to the individual tax return through the CARES Act, such as recovery rebates, special taxes for qualified tax retirement plans, to name a few. We're not going to go down that path, but I just wanted to get that on people's radar. And Paul, I really thank you. I think that was a really good synopsis of some of the really pressing topics of relevance for small business owners. I've got a couple of questions, if I may, just before we get into a brief summary. And I know there's a topic that we're going to cover a little bit later on in this conversation, which relates to the state of Utah and their activity around ensuring businesses take full advantage of these federal programs. But before we do, some questions have come up with respect to the EIDL loans. And this is something I'm going to throw out to everyone on the panel. It's a specific case, but it relates to a company that employs 3 independent contractors, still being paid, still working. Can the company apply for idle loans to assist that company as they continue to pay those contractors, given they're not a W-2, but rather a 1099? Now, I think that's obviously, I know the answer to that. I'm not going to respond to it, but I'm going to throw that out to the 3 of you. It's different than the PPP. W-2, the PPP addressed W-2 employees. Idle funding, which is an interesting acronym, but idle funding is different. Who would like to take first shot at it?
I'm happy to take a first whack at it. I think the answer is yes. The idle loan is something you can have at the same time as a PPP loan. The only condition is that it be for a different purpose other than what the PPP is for. And as you mentioned, as we've said, the PPP is for payroll, and payments to 1099 contractors, for better or worse, are not considered payroll under the PPP program.
Correct.
So you would be using, in this case, the idle loan for a different purpose.
Mm-hmm.
You know, the only negative is the idle loan is a loan, other than is potentially an advance on the loan of up to $10,000, $1,000 per employee, and that bit is would be forgiven. But above and beyond that, up to $10,000, it's a loan that you have to pay back, and the maximum idle loan is $2 million, whereas the maximum PPP loan could be $10 million.
10 million, that's right. Though the criteria for application is different. So the PPP is capped according to your payroll. So you've got to have a rather large payroll to be, assuming $10 million of PPP funding. Idle, though, is funding that's available. As you said, there's a rate that's applied to it. It is relative to what we're seeing on the PPP, it is nearly 4 times that rate. But it doesn't have the restrictions on application of funds, and the duration of the note or the loan is significantly longer. And Tim, do you want to talk to that?
Yeah, the duration is longer, but I was also going to throw in, there are a couple hurdles in that loan as well too, that should be potentially considered. And jump in if I'm getting these numbers wrong, because I might have not memorized them correctly, but they are going to pull credit on that loan, but you aren't. It's not collateralized. I believe up to 25,000. 200. I believe that's not a personal guarantor.
Sorry, you're right. Yeah,
it's collateralized. So, for instance, such as this person with the independent contractors, if $25,000 helps them, they're not looking for collateral and they're not seeking his personal guarantee. That might not be a bad option for him.
And so it's interesting that, sorry, David, go.
If I could just throw in, if part of the reason the person wants to get this loan is, so that contract employees continue to get paid, I mean, it is a bit complicated, but it should be noted at least that the 1099 contractors themselves as individuals can apply for a PPP loan. That may not leave them wanting to work for the employer, but at least they'll be paid.
Exactly right.
And that bit that the 1099 contractors are considered themselves, if you will, small businesses to get their own loans is confusing to some, but it is the way the law was written, and so worth noting in this situation.
And it's an interesting process as well, because I know I've spearheaded efforts across Kiln's applications, right? As a small business, and we've gone down the PPP path. We are going down the EIDL loan path because it's interesting as a facility for emergency funding if required. And it's not as, I would say, it's not as transparent. There's a bit more subjectivity, and it's out of the hands of the applicant. It's not binary with the PPP, but it's based on information that you submit. Right, on payroll. It is what it is. And the bank will underwrite that accordingly, according to the SBA underwriting guidelines. The idle loans, though, that get submitted, they go through to the SBA as well. And then the SBA will make a judgment and an assessment on the maximum $10,000 grant. So it will be based on the size of payroll, et cetera, or the size of employees, or other metrics. But there won't necessarily be the full $10,000 grant. And you don't have visibility on why it's not a $10,000 grant. And second to that, as Tim said, there are collateral requirements, then there are personal guarantee requirements, and it's based on the individual, the manager or the primary shareholders' credit rating. So that is a factor as well, and their credit score. And then you've got to decide based on they'll crunch their numbers and do their assessment based on certain criteria and assessing the impact of COVID on your business based on metrics you put forward. And then they'll make you an offer, but that's not guaranteed then to be underwritten. It's quite an interesting process. And I've spoken to a lot of companies. So people I know that have been approved for idle loans or had a value put out there and then have been rejected on the back end when actually it came to underwriting. So there's a little bit, I mean, it's not every case, but it has been not infrequent. So, and it's a smaller pot of funding as well, which has been set aside. And so I think thus far, there's been about a 3-week delay. So if you had applied as soon as the application process had opened for idle loans, and I know we're getting off topic just a little bit, but obviously people are looking at these idle loans as a facility. Currently there's a 3 to 3.5 week lag on review of those applications. And then you've got to go through underwriting. But I think the underwriting process is relatively quick and the funding can be received. I know the grant funding that's attached to those idle loans, if you submit, it's a no-brainer. It's another source of funding, and we're off the topic of tax, but it's another source of funding, as was the GoEd grants for the governor's office with that process that ran and opened, and now that's closed. But it's $10,000 that could be extended to your business simply for applying. And then it's up to you to decide as the business owner if you need the funding or not based on a change in the economic climate and your business circumstances. You can decide to accept that or reject it. It's not obligatory, it's a loan. Anything else to add on that topic? I hear the sound of silence, so I'll assume that's a no. Right then. So I think this has been really helpful. There's a state response that we're going to finish up with now, but I just want to caveat as well. It is obviously very important to it. You know, there's a lot of information and a lot of topics in play right now as companies navigate their strategy on business disruption and avoidance of economic pain. It is critically important that companies navigate this and probably seek technical advice as well. Most companies will have a tax accountant and an accounting firm and a finance function, potentially not. But there's enough advisory information out there and technical resources that I think it's important that if you're not ahead of it as a topic, you probably need to make sure that you're capitalizing on those opportunities and all the options that the federal government and state governments have put out and available for companies, both from a tax, from a loan perspective, from grant funding perspective, etc. Now, in the event that you do have a gap in your technical support, obviously we've got Tim here from LJ Cooper. We've got Paul here. Paul, and it's from Parr Brown, is that correct?
Parr Brown, yes.
Parr Brown, excellent. So Paul Barrus from Parr Brown. And David Carlebach is a stalwart of the Utah economy with the World Trade Center at Utah. The World Trade Center provides a great database of resources as well to help companies navigate this process. So if there is any need for support, don't hesitate to reach out either directly to Kiln and we can direct you to the individuals that have participated on this call, this webinar today. And if not, hopefully you've got within your own networks assistance that can support you from a technical perspective. Now, I think on that note, we're just going to wrap up with just a quick summary and synopsis of the state response. And David, you're right at the forefront of this, obviously, interfacing with state and federal governments in your role at the World Trade Center. Just give us a quick overview of what the state of Utah is actually doing to ensure businesses around the state do indeed take full advantage of these federal programs.
Great, happy to. Thank you for that setup. Right, so long before Trump formed the Economic Response Task Force at the federal level, the state of Utah formed an Economic Response Task Force. Sometime back in mid-March, Governor Herbert organized a task force. It's being led by Derek Miller of the Salt Lake Chamber of Commerce. And its purpose was exactly as you said. It was to both understand what all the issues were within the state, to understand what's being done in response to that, and then to build a bridge between the two, including proactive communication, but also a lot of listening a lot of integration of the feedback and then taking that feedback to various leaders within the state and federally, including our congressional delegation to Washington, D.C. I've seen a lot of dialogue started by business people throughout the state, being integrated, as I said, through the task force and then taken to Senator Romney or Senator Lee's office, et cetera. And I think it's making a difference. The task force itself meets all the time. I think it has a plenary meeting once a week. Key people on the task force, and these may be people who you know or could get to know, so above and beyond the established communication channels. These are individuals who have influence and might be worth speaking to. As you mentioned, the World Trade Center is leading one of the committees, which is the Federal Resources Committee. That's under Miles Hansen, who's my boss. So reaching out to me or Miles if you have feedback on federal responses. I won't name all of them, but there are also committees working on industry outreach led by J.C. Skinner from Ballard Spahr, and Scott Anderson is leading the financial committee, obviously from Zions. So those are some of the people to possibly talk to, and they are doing good things. I'll just mention one that's been alluded to a little bit here, which is under the Federal Resource Committee. We did form a rapid response team, which is 50 plus volunteers who've answered over 1,600 inquiries from small business owners over the last few weeks, helping them get the kind of information that we talked about today. And we've been doing that again on an all volunteer basis. It really shows, I think, the state of Utah and the people of Utah banding together to help everyone in the state through this difficult period. If you want more information on what the state's doing, I recommend you go to the coronavirus.utah.gov website. That's supposed to be the catch-all site where you can get information about what the state's doing at the municipal level, at the state level, at the federal level. And there is a form on that page called for the rapid response team that you can fill in if you want to log a question. We're trying to get back to everybody within 24 hours on the back of that.
Excellent. I think that's really helpful information. And so I think that brings our conversation to a close. And I wanted to thank Tim, David, and Paul for your time today. I hope it's been informative for our viewers. I know it's been informative for myself. I've learned a lot about the CARES Act, which has been very insightful. It's going to be very interesting 3 to 8 weeks, probably more than that, probably 8 to 12 weeks, I would say, based on the current trajectory. But there is an overarching sense that hopefully the worst is behind us. And we do what we can to provide technical guidance to the broader community. And so again, I thank you for your contribution to the three of you on today's webinar. On that note, I'd like to sign off. Stay safe, Utah, and stay beautiful.
Thank you.
Thank you.